Hey guys, Kanao here from Level Traders. Today we're going to be moving away from chart patterns and we're going to be focusing on volume. We're going to look at what volume is, why it can be useful in trading, and how it can help determine breakouts in charts. We'll also look at the psychology of what volume tells us in price action. Hopefully you find this one useful. Check this out.
So first off, what is volume? What does that even mean? Well, volume illustrates supply and demand. For shares, for example, it is the amount of stock that's traded for the day, which includes both buy and sell orders. You might ask, why is this useful, or why should we even care about volume? Well, volume helps identify breakouts. For example, if you see a stock that's appreciating on high volume, it's more than likely the move is likely to be sustainable. The volume provides conviction that this move has legs because multiple investors, traders or funds are purchasing the stock. Conversely, if a small amount of money is moving the stock price, the odds are that move isn't going to be sustainable. This is because a large order could come in and completely change the direction of the move. It's something to be wary of, as you could lose money by getting trapped by a move which has very little volume or conviction. Logically, when more money is moving a stock price, it means there's more demand for that stock. The other thing to be wary of is low volume illiquid stocks, where you could end up trapped in a so-called pump and dump scheme where the stock price moves up sharply and then downwards due to a one-off large order. Now, even if you're trying to play this artificial move, you might not be able to find a seller if the volume is so low. You're going to be locked into a losing trade. So be wary of that. That's something to be cautious about. Now, like everything in life, there's an exception to the rule. Buying low volume stocks is okay when you've done your due diligence and research and you've concluded that you found a good company that has yet to be discovered. Now, in this scenario, maybe you've gotten ahead of the curve so that when volume does increase, you've got the potential to make outsized return. And that's what every investor or trader dreams of, right? The one example that we've had recently that everyone is probably aware of is GameStop. This is exactly what happened to GameStop, where volume exploded at the start of this year, where traders or investors were able to make outsized returns. So let's look at some real examples now. So here we have Bank of America. On the 23rd of March, you can see 57.73 million shares exchanged hands. Okay, so on the face of it, you're probably thinking, so what? Doesn't tell me much. And yes, on the face of it, it doesn't tell us much unless we compare this to historical data or trends or correlate it to another piece of data. So here we have a chart with volume, price, and the 200-day moving average. Already this is more meaningful as you can see the historical trend of volume. There is also patterns that we can draw out from this chart. So firstly, this is a daily chart of Bank of America covering the period June 2020 to March 2021. The first thing we can note, we can see that Bank of America, the average volume looks to be somewhere in the region of 50 to 60 million shares per day. That's consistent with the number we just looked at previously. So what I've done is I've picked out a couple of examples where volume has spiked. Look at what happened to price. So if we look at early June, we can see volume began to pick up. As volume began to pick up, price reached the 200-day before being rejected. Volume spiked during the sell-off where price fell sharply. So what that's telling me is this move out of the 200-day isn't sustainable because heavy volume came in to sell off, sold the market. That tells me Bank of America isn't ready to break out yet. Then, if we look at the big spike in November, where volume pushed 150 million shares traded, highest it's been in this period that we're looking at. Look at what happened to price. Price broke through the 200-day. This is an example of how volume can help identify a breakout. Big volume saw price move sharply higher and break a key technical moving average. After that, prices remained above the 200-day, so from this we can get confidence that the move in early November was sustainable and frankly was a game changer which led to the price appreciating in the coming weeks and months. There are also patterns to be picked up from price and volume. Here I've got a daily chart of AMD, so I'm covering the period February 2020 to August 2020. Notice how late February the volume begins to pick up. You can see that the sell orders begin to outnumber the buy orders, and that's when there's a period of weakness in the price. Then in late July, where volume really picks up and buy orders are outnumbering the sell orders, showing the volume bars as all green, there's a sustained period of strength where price really takes off. Again, volume indicates here that movement is sustainable, providing conviction to the trader in which direction price is likely to move. It should be noted that, like all indicators and chart patterns, volume shouldn't be used though in isolation for generating trade ideas. Volume should be used in conjunction with a number of factors to determine and evaluate whether a trade is worth pursuing. So let's have a look at one final example. So here I have the S&P 500 chart. This is a daily chart covering Feb 2019 to April 2020. So two things to note here. One, look how low volume leads to the market drifting higher. So I've got an example here. You can see towards like April and October 2019, you can see how price is just floating higher and volume's relatively light. And then there was that big sell-off that we had around February, March 2020, and you can see how volume really spiked up. So heavy volume led to the S&P selling off. So the bias here is when volume is light, the price tends to drift up. Again, just another idea on how volume can be useful in trading. Hopefully you found this video useful, where we've covered volume and different aspects of how you can read volume and almost the market psychology behind it. Thanks again for watching. Take care.